Hello guys, welcome back. So today we're going to talk about Forex weekly analysis for Monday 30th of June through Friday 4th of July 2025. So as you all know, I always start with the dollar index for the week because the advantage of starting with dollar index is because once you know the direction where the dollar index will be going, then you can easily frame ideas, trading ideas for all other pairs that you're possibly trading. So let's quickly take a look at the dollar index for next week. Now, several weeks ago, we had a fair value gap down here. A fair value gap is when we have three candles. Let me quickly zoom in. A fair value gap is when we have three candles. We have candles 1, candles 2, candles 3, right? So I'll extend this down to this place. We have three candles like this, candles 2, candles 3. But the middle candle, which is the second candle, moved with speed and distance in a way that we now have a gap between candles 1 and candles 3. For example, between the low of this candle 1 and the high of this candle 3, there is a gap. The wick of candles 3 does not come up to overlap the wick of candles 1, which is supposed to be down. So we have a gap. Now, when we have prices like this, we call them fair value gap, which simply means sometimes in the future, price will come back to fill in those gaps or those imbalances because we have some form of imbalance, right? So that's what we had in dollar index, and as you can see, we had price coming down for several weeks. This is a weekly time frame. We had price coming down for several weeks, and then ultimately we saw price coming in to fill in the fair value gap that was created several weeks ago, in fact several months ago, right? So we have the gap being covered here, so we call that fair value gap, right? Now, like I always say, price will always want to do one of two things or two things at the same time, right? We have price trying to cover up for liquidity or inefficiencies. A fair value gap is some form of inefficiency, right? Because price was not sufficiently covered here, right? So we have later on in the future price coming to cover up these spaces, which is some gives some form of inefficiency. So in this case, we had price filling the fair value gap, and then the goal has been met, so price is ultimately coming down from the fair value gap. And then look at where we are currently, right? While coming down, there is a fair value gap here. When I talk about fair value gaps, I want you to see fair value gaps as the real support and resistance, right? I don't care what strategy you've learned before, whatever style you're trading before, but this is how price actually broke, right? So when we have a fair value gap and we see price trade to the fair value gap, we will naturally expect a pullback from the fair value gap. When we see price trade through it and close through it, the fair value gap we have here, like for example, we have candles 1, candles 2, candles 3. This is a fair value gap, right? There's a gap between candles 1 and candles 3, and that's the gap we call fair value gap. We'll naturally expect price to trade into it. But once you see price trade through it and close through it, then the fair value gap automatically becomes what we call an inverted fair value gap. The fair value gap was supposed to act as support, but now it was broken and it's now turning resistance. So since we've broken it, we've closed through it, we expect price to come back to it and then act as resistance, just like we're seeing here. So We broke through it, came back, acted as resistance, and then was seeing price coming downwards, right? And then we call this an inverted fair value gap. So currently here is where we are in the market for the dollar index. We have been quite bearish and then we're still coming down, right? So this is the past week candle and then we're still expecting bearish movement. To where? Good question. So this coming week we have there's a candle here that we'll call sell side because there's liquidity down there, right? There's liquidity down there, so I expect price to continue to the downside to read this sell side, this low of dollar index. It might happen this week, might be next week, but I'm still very bearish on the dollar index. So since we already have our bias for the weekly time frame, let's go down to the daily time frame for the dollar index. All right, so these are daily time frame for the dollar index, right? And this is the inverted fair value gap we had for the weekly time frame. If I'm going to extend that to the right, this is the inverted fair value gap. You might not see much of a thing on the daily time frame, but we know this is the inverted fair value gap extended to the left for the weekly time frame. And then the daily time frame, remember we've been quite bearish. So we're bearish here. We had bearish candles. We saw price coming back to the upside. Where is it trading back to the inverted fair value gap on the weekly time frame? And at the same time, what do you see on the daily time frame? We had candles 1, candles 2, candles 3. There's a fair value gap here. So on the daily time frame, we saw price trading into the fair value gap, respecting it perfectly, and then trading away from it, right? So we're still quite bearish on the daily time frame. Over the past few weeks, price has been choppy somehow, but when you know what you're doing, you still have directional bias in the market, and then we're still very bearish on the daily time frame. And then moving down, this is the sell side we had on the weekly time frame, which means ultimately I will be targeting this low for our daily and weekly time frame. We are probably going to see some retracement to the upside, but ultimately I'm bearish on the dollar index, weekly and daily. So let's move on to the next, which is euro dollar. As usual, we'll start with the weekly time frame. All right, so these are weekly charts for the euro dollar. Several weeks ago, we had this as a fair value gap, right? Remember, we have 3 candles for a fair value gap. 3 candles for a fair value gap. Candles 1, candles 2, candles 3. The second candle usually has a gap. We do not have wicks overlapping candles 1 and candles 3. So there is a gap here. This is what is referred to as the fair value gap. So in the future, we're expecting price to trade down into the fair value gap. We did slightly here. We didn't fill it completely, but it acted as a support, a real support, right? And then after that point, we saw price moving to the upside, trading through a volume imbalance. Right? I'm giving so much knowledge in this very video, but moving forward, for you guys to understand what I'm talking about, I think I should probably explain this term. A volume imbalance, right? Let's quickly move to our charts to the left hand side. Let me explain what a volume imbalance is. So a volume imbalance is still some form of inefficiencies, right? Remember, we always say price will always trade to an inefficiency or liquidity. So here's what a volume imbalance is. We have candles 1 and we have candles 2. It consists of just 2 candles. But in this case, you realize that when a candle closes, you expect the next one to open right after the candle, right? But now between this candle and this candle, there is a gap. It's a weekly candle. There is a gap. There's a huge gap. So which means when price closed here, let's say on a Friday, since we're on a weekly chart, price closed here on a Friday. On a Sunday, when price, or Monday when price was opening back, depending on where you're watching from, there was a gap between the previous week's candle close and the new week's candle opening. So price closed here and opened here. We only had the wicks overlapping each other. The bodies of the candles have a gap. So when we have gap within the bodies of the candles like this, we call it volume imbalance. So if we extend this to the right, we saw that price went down and then later came up in the future. This volume imbalance was properly respected and then traded that back down, right? But that's not the point right now. We're talking about it happened twice, came back again, traded back down before coming back to this fair value gap. But right now, we saw price trading through that volume imbalance, and not just through it, we want to see it close above it. Once we have that, the volume imbalance that was once a support would turn real resistance. So we're seeing this as real resistance right now. Price closed above it, came back down, respected the volume imbalance perfectly, and then started going back up. But I know some of you might say, oh, but wait, the wick went through it. Yes, the wicks do the damage. The bodies of the candles tell you the story. The bodies of the candles respected this volume imbalance perfectly. This is a topic for another day. So now, currently, we saw price moving towards the upside, quite bullish on the euro dollar, and then we've taken out a buy side liquidity. This is a weekly high, right? Let me quickly zoom in. So yeah, it's a slightly weekly high. We still have other highs here and another one here. So moving forward, I'll expect euro dollar to continue moving to the upside this coming week, right? So daily time frame. All right, for our daily time frame for the euro dollar, this is the volume imbalance that we had on the weekly time frame. You won't see much on this chart because price has been choppy over the past few weeks, but we still have something to work with, right? So here, whenever you open a chart, just check if you see anything like a fair value gap. So in as much as I'm expecting price to be bullish over the next few weeks, we might have some retracement, right? So if we have some retracement, where could we possibly have price coming down to before moving back up? We have a little fair value gap here. We have candles 1, candles 2, candles 3, and then there's a little gap here. I think I'll have to zoom in a bit. There's a little gap here between candles 1, candles 2, and candles 3. There's a little gap here. We might see price coming back to this little gap, respecting it before moving back up. Or we might see it trade through it, coming back to this big fish here because this is a better gap. It's a bigger gap. Let me annotate that for you to see. This is a bigger gap. Might trade down to this place before moving back up. But ultimately, I am still bullish on the euro dollar this coming week. All right, let's talk about dollar index. Let's talk about dollar index. So quickly on a weekly time frame. All right. So over the past few weeks, we were moving sideways, and then extensively we went to the upside, and then now we're back down. So what do we have this current coming week? Remember, we've been talking about how to frame trade ideas using fair value gaps, right? Now, in this very case, we had a fair value gap here. Candles 1, candles 2, candles 3, and then there's a gap between candles 3 and candles 1. which gives us this fair value gap, right? Extended to the right. We saw price coming back down. Remember, we said once we see price closing below a fair value gap, usually we're supposed to see price coming here, close inside a fair value gap, and then in that case we will be almost sure that we'll be reversing from here. It will act as a real support. But I want to zoom in a little so you see properly, right? Price closed below this very fair value gap. Look at the low of this candle. I used a rectangle tool and extended it to the right, right? It closed below this fair value gap. So which simply means this fair value gap will no longer be acting as support. So we've closed below it. We're coming back up is just for the sake of price for lower time frame, and then we apparently trade back down through it properly this time. So we're still bearish on the Canadian dollar, USCAD, right? We're still bearish. So this coming week, I'm actually expecting lower prices on USDCAD on the weekly time frame, right? Let's go to the daily time frame. All right. So here's our daily time frame. Remember, on the weekly, we're bearish. What have we been doing so far on the daily time frame? We had a fair value gap on the daily time frame. Candles 1, candles 2, candles 3, and then there's a gap here. We saw price trading down, and then eventually we saw price coming back up, trading into the fair value gap and then away from it, right? So coming this week, best case scenario, I would like to see price be bearish, but if it should go up at all, I won't want to see it close above this daily fair value gap before coming back down. If it closes above this daily fair value gap, then most likely we'll be returning back to the upside for the USDCAD. But going to my head, I'm bearish on USDCAD. All right, so finally, let's talk about the British pound, a cable, which is USD, British pounds, USD, GBP, USD. So over the past few weeks, we have been quite bullish on British pound, US dollar. So remember, I've annotated most of these fair value gaps, and you see how price is respecting these fair value gaps, right? We have candles 1, candles 2, candles 3. See price trading back into it, acting as real support and trading away from it. Candles 1, candles 2, candles 3. See how price trading away from it, coming back, acting as real support, and then going back up. Candles 1, candles 2, candles 3, fair value gap. Saw price trading up, closing above it, and then moving back down, acting as real support and going back up. It looks like good, right? This is how price book. Yeah, this is how prices are getting bought. So when we see things like this, fair value gaps getting respected, it simply means we are moving towards the opposite side of the fair value gap. If we see fair value gap acting as real support, then we'll still be bullish further. So we see a good order flow of price respecting fair value gap moving to the upside, respecting fair value gap moving to the upside, respecting fair value gap moving to the upside, which means we're still very much bullish on the weekly time frame. So next week, I'm still expecting higher prices on the GBPUSD. So our daily time frame. All right, not much to see here. Just price respecting the weekly time frame, fair value gaps. Also, we're seeing here, and then our daily. If I would really want to see some price retracing back into this fair value gap here. Before I didn't annotate that. You should take this as your own take-home assignments. Open your GBPUSD chart and then annotate a fair value gap here. Take your rectangle tool, annotate a fair value gap between candles 1 and candles 3. Extend that to the right. We expect price to come back to it before moving back up. Will price comes down to this fair value gap right now? I do not know, because ultimately we're expecting higher price movements on the GBP USD. So if price retraces once we have a market open, I won't expect it to close below this fair value gap. I know most of you would want me to annotate this. Let me just quickly do that. All right, so we have fair value gap. Yeah, a daily time frame. All right, so I'd like to color this green. So I'm still bullish on GBPUSD. So to have some retracement back down before moving up, I would want to see price close below this fair value gap. It can trade through it using wicks, but I won't like to see it close below this fair value gap, right? So there are so many other pairs that you can analyze, but here's the trick. So far, we've talked about the dollar index, which is DXY. DXY, we said were bearish for the week, and then which simply means right now we are risk off. So which means right now we're risk off. For all other currencies, they are moving to the upside, especially those trading acting as quote currencies using the US dollar. So that's why we're bearish on the dollar index, we're bullish on euro, we're bearish on CAD, USD CAD, and then we're bullish on GBP USD. Whatever currency you're trading that has USD as quote currency most likely will be bullish. But if it has USD as the base currency, you're likely bearish. I'll repeat that. Whatever currency you're trading that has USD as the quote currency, you're likely bullish. But if it has USD as the base currency, you're likely bearish. That is why for British pound USD, we're bullish. Dollar index itself is bullish, is bearish. Euro USD is bullish. USD Canadian dollar, USD as the base currency is bearish. So I believe I've made so much sense today. If you like this so far, you like what I've done so far, I need you to drop a like, comment, and share. And most importantly, subscribe to my channel, because more beautiful videos will be coming your way this coming week and in the next coming weeks. And until I talk to you next time, I wish you good luck and good trading.